What is Balancer? How to use this automated market maker? The Balancer protocol is an automated market maker, AMM, that is generic. It was created using Ethereum. It allows anyone to create or contribute liquidity to their chosen pools and earn trading fees. On the one hand, there are liquidity providers, LPs, who, in most cases, try to balance their holdings to get trading fees. On the other hand, some traders are looking for the most advantageous rate they can get. The Balancer can be considered a generalization of Uniswap. However, unlike Uniswap pools, Balancer pools are not bound to the same 50-50 split between two tokens. Up to 8 tokens of arbitrary weights can be held in a Balancer pool simultaneously. It provides smart order routing, which directs trades to the pools with the highest possible rate. This guarantees that customers receive the best possible deal. In this context, you will get paid for adding liquidity to the platform, which may be considered self-balancing index funds. You collect fees from traders who regularly rebalance your portfolio by chasing arbitrage opportunities instead of paying fees to portfolio managers to rebalance your portfolio. The inner workings are fairly complicated, but Fernando Martinelli, CEO and co-founder of Balancer, simplifies the token economics and governance of the system for us. The Balancer is registered as a decentralized autonomous organization, DAO, in the UK and Europe. This means it will have to abide by rules set in place by the community via smart contracts, which will trigger changes in Balancer's internal rules. Smart contracts on Ethereum govern the system. To make this a stable system, dynamic fees are set for each contract based on a reasonable rate of return per period, which can be more often than once per day. What is Balancer? The Balancer is a system that combines an automated multi-signature wallet, AMM, decentralized exchange, DEX, and liquidity pool that enables users to trade ERC-20 assets without having to rely on any centralized institutions. The Balancer is a permissionless platform, meaning anyone can access it provided they have a compatible wallet loaded on their device. An automated market maker, often known as an AMM, is simply a platform that manages orders based on an algorithm, as opposed to the bid/ask mechanism utilized by the vast majority of centralized exchanges. The value of assets is determined with the help of this algorithm. BlockScience, a blockchain consulting company, is the company that developed the Balancer protocol. In March 2020, BlockScience launched a funding round in which they raised $3 million by selling 5 million of the platform's governance token, BAL. It is among the top 10 DeFi networks on Ethereum, with a total of $850 million worth of assets held captive on Balancer as of January 2021. This makes it one of the most prominent platforms in this category. The Balancer has a daily trading volume of $1.3 billion, the highest among competing platforms. The idea behind Balancer was conceived by Fernando Martinelli, the company's CEO and co-founder. In 2015, he started to develop the concept and his team is responsible for its implementation. The Balancer platform went into beta testing in May 2017 and moved to open beta status in June of that year under the name SIN, an acronym for Secure Investment Network. How does Balancer work? The Balancer is a decentralized exchange that utilizes AMMs. The system acts as an intermediary between two parties to limit the risk associated with any trade they plan to make. Using a Balancer allows users to access selected assets without relying on any centralized institution. An AMM manages orders, while Balancer acts as an intermediary between two parties interested in trading one or more ERC-20 tokens. The AMM will match buyers with sellers and provide them with a quote for the terms of their trade. Orders are matched based on a weighted price from the Smart Order Book (WOB) algorithm. This algorithm considers both the buyer's order size and the seller's order size and the distance from the top or bottom of the order book. When an order gets matched, Balancer executes it either on its exchange or through a decentralized exchange compatible with Ethereum smart contracts. The Balancer has already partnered with PumaPay and Augur, creating DEXs. The use of a Balancer takes place in 2 stages. In the first stage, an AMM coordinates orders from traders who want to buy or sell an asset. In the second stage, the customers of the AMM collect their trading fees and rebalance their portfolios using the money collected from trades. What is an automated market maker? AMMs are an emerging tool for crypto traders. They perform functions opposed to the centralized exchanges traders have been using. AMMs act as market makers, meaning they automatically create orders on both the buy and sell side of the order books. While this may sound simple, it is a complex process. First, an AMM has to connect with many other exchanges to obtain a full view of the entire marketplace for each asset it trades. In decentralized finance, one of the tools that are used to offer liquidity is called an automated market maker, or AMM, DeFi. They are used to make possible the exchange of digital assets in an automated fashion. They accomplish this goal by utilizing liquidity pools as a substitute for the conventional buyer and seller markets. You can conceive of an AMM as a program that assists traders in swapping between two assets at a price that reflects the fair market value of those assets. The popularity of AMMs skyrocketed quite quickly. People had to trade using order books before AMMs were commonplace. People could acquire and sell assets at different prices since traditional exchange systems allowed them to do so. After some time, other users will select a price that has been stated that they think is fair. This price eventually becomes the asset's market price after some time. The traditional method of generating markets requires experienced market makers who can juggle a high volume of customer requests. Therefore, it is expected of them to quote the volume of trade that they can accommodate. They are restricted in the times they can provide the most competitive price quotes daily. For them to efficiently sell from their stock during trading hours, they must adhere to a certain set of parameters strictly. The majority of assets, as of right now, are still dependent on the conventional exchange system. This is the typical method for trading securities and real estate assets. AMMs provide a more recent alternative that can be used for DeFi. AMMs can make a financial commitment to every trade that they undertake. The purpose of this commitment is to allow them to provide liquidity even though they cannot predict what products will be sold in the future. This approach allows them to take advantage of their trading apparatus. How AMMs work? AMMs can purchase a wide variety of assets from any trader. They will do so at the price that the trader sets. This can be performed in various ways. The AMM might either buy a different type of asset or use the funds to purchase more of the same specific asset that has been sold. The latter is known as buy-side liquidity provisioning. AMMs are a type of decentralized trading platform that allows users to make trades at any time. Its primary characteristic is that it does not adhere to the conventional method of buying and selling goods. You won't run into any gatekeepers, and in most cases, you won't even have to register for an account. AMMs are designed to offer liquidity to the DeFi market. The capacity to convert one asset into another without affecting either asset's market price is referred to as liquidity. Liquidity is inevitably a problem for DeFi exchanges because they contain novel assets that are difficult for many people to understand. Traditionally, liquidity was provided by market makers who could do so for extended periods. This is known as buy-side liquidity provisioning. However, AMMs can provide liquidity to DeFi markets because they can convert assets into one another without causing any disruptions in the market. AMMs can also make a financial commitment to every trade they undertake. This commitment allows them to provide liquidity even though they cannot predict what products will be sold. How to use automated market maker. One of the primary benefits of using an automated market maker is the ability to trade in a safe environment. Traders might not jeopardize their assets with unnecessary risks. If they use a traditional exchange, they must be mindful of other investors and traders who may want to participate in the trade. There are many instances where traders buy without knowing whether or not there will be partners who also want to buy. This is what makes it difficult for them to recoup any potential losses. On the other hand, traders who use an automated market maker only need to worry about the price of one particular asset. As a result, they are not in a position to compromise the value of their assets. Additionally, market makers who use AMMs can configure their trading orders for all types of terms. This means traders with various investment plans can execute them easily. That way, they don't have to wait for the specified period before executing their orders. Market makers can also use an automated market maker to execute trade orders that are not limited to a specific timeframe. This is an advantage because it ultimately saves them time and money. The best thing about using an automated market maker is that AMMs can simultaneously bring together traders in the same space. Traders with unique trading needs will find this feature useful when doing their exchanges. The future balancer. An alternative to the automated market maker is to use a hybrid model that combines traditional and decentralized exchange aspects. The Balancer project provides an example of this sort of model. In the future, Balancer aims to be the largest distributed automated market maker for the DeFi ecosystem. It will provide traders with lower fees than what has been charged in today's centralized exchanges and allows them to trade across various assets such as cryptocurrencies, bonds, shares, and derivatives. The Balancer has had nothing short of astonishing growth since it was initially introduced to the public in March 2020. It is now the 9th largest DEX measured by trade volume and the 8th largest Ethereum DeFi app measured by total value locked, TVL. The development of Balancer will be centered on working towards the silver release and the golden release throughout the upcoming months and years. These are the next two improvements that are slated for the platform. The silver release will have various gas optimizations, and pool administrators will be given more flexibility. The golden release will offer several new features, some of which have not yet been announced, including a strange new liquidity mechanism. The Balancer team says their long-term vision is to be the most reliable and secure market maker in the DeFi ecosystem. They are targeting this vision by consistently being relevant in all aspects of DeFi, including liquidity, volume, and features. The Balancer is also developing a price indexing system that will provide traders with new ways to trade with an automated market maker. Conclusion: AMMs are one of the newest and fastest-growing platforms available today. They are also a safe and reliable way for market makers to make money while fulfilling the liquidity needs of their specific customers. Furthermore, they will be able to create a demand-supply relationship that improves liquidity. As a result, traders using AMMs have gained far better results than those using other trading methods. In the future, we expect to see more investors and traders who use fully automated market makers to ensure they can earn a living while trading the assets they like. An automated market maker, or AMM, is a software program that provides liquidity on decentralized exchanges by automatically pairing buyers and sellers of assets. Traders who own an AMM can make money from trades without interacting with other users directly.